Hello, everyone. Thank you for joining us today for our webinar, Achieving Financial Independence for Young Adults on the Autism Spectrum. I'm your host, Sharona Summer, the National Director of Learning and Development at CIP. Founded in 1984, CIP is one of the most comprehensive programs for assisting young adults with learning differences to succeed in college, employment, and independent living. Our mission is to inspire independence and expand the foundation on which young adults on the autism spectrum, ADHD, and other learning differences can build happy and productive lives. I'm very proud to introduce our presenter for today, Andrew Komarow. Andrew is a certified financial planner and founder of Planning Across the Spectrum. Andrew specializes in helping any individual, family, or employer of those with autism and other disabilities pursue financial independence. Andrew provides a unique perspective for those with special needs, their caregivers, and their families because he has walked in their shoes, having received his autism diagnosis late in life. Andrew is a passionate advocate for autism awareness and has educated himself in everything possible to help the underserved autism community. In addition to his certified financial planning designation, Andrew holds a master's degree in financial services and holds many other professional designations. Welcome, Andrew.
Hi, thank you for having me. Thanks for the introduction. So I'm going to start. I try to make this as interactive as possible, so when I need to interrupt me, please do. You can save questions for the end. I may tell you they're coming, but I try to just make this really simple and impractical and, at least somewhat entertaining. My goal is at least everyone gets at least one chuckle in during this, and also that they learn something to take away to hopefully have more money in their pocket at the end of the day. So, and if there's any other questions, again, let's try to have some fun. So why are we here? So we're going to talk about the basics of banking and money and concepts. We'll talk about what you can do to maximize your money and why it's important to save. I really try to talk about the practical aspects for, an individual wanting to be independent to manage their money and not talk about all of this, lingo and technicalities. I can absolutely spend hours and hours doing all of that, but I find it doesn't necessarily help people either, right? So what I find is, especially when it comes to money, and by the way, it's everyone, not just people with autism or other disabilities. Everyone's very anxious about it. We all think it's complicated. And I really want to break it down simply. One of my favorite quotes is Einstein said, if you can't explain it simply, you don't understand it well enough. And I really think, finance is one of those things where nobody understands really well. I don't have a budget. I know I'm going to talk about establishing a budget, but I just want to let you know, I don't have a budget, right? And so don't feel like you need to do everything on this list, in order to be successful. And unfortunately, money and bills are one of the things where if you ignore them, they don't go away. I promise you, right? So there was the joke, if anybody on the call even remembers Blockbuster, that if you didn't return like a, movie, that they would find you no matter what country you were in. I promise you, when it comes to debt and owing things, that it's very similar. So, but it doesn't have to be that scary. It doesn't have to be that hard. So banking. So relatively speaking, the current economic environment has made a few things a lot easier when it comes to selecting a bank account. So, for example, if anyone on this call does not have a bank account, you absolutely should. It's very important. I usually recommend a bank that is online, especially since COVID, now more than ever. And it's really important to find one that is easy to use. At the end of the day, I find for just a simple bank account, having one that you know you can call, you can get some good help, and that they don't have lots of fees. If anyone on this call has Bank of America, you know exactly what I'm talking about. They're just atrocious for, nickel and diming you for like everything. I find there's some good online banks like a Capital One, 360, or a lot of local credit unions are very good. They might not have as many good online tools, but really simpler the better. So again, if you don't have a bank account, you should try to make one where there's no fee even if you don't do anything. Sometimes that's not possible, but a bare minimum. So for example, a lot of banks will have, if you get one direct deposit a month, then there's no fee. So if you know that you're getting a direct deposit a month, then there's no fee. Having, minimum balance requirements. At the end of the day, all credit unions, all bank accounts are all federally insured in some way, shape, or form up to at least $250,000. So really just find the one where it's going to be easy to access your money and easy to do things. For example, depositing checks is kind of fun. You take a picture with your phone, you deposit a check. There really aren't a lot of reasons for most people to go to a bank anymore. I also find that if, let's say, you have a spouse or a parent or someone and they have a bank at a certain place, it's much easier to get money from your parents if you have the same bank. They can transfer it a lot easier. So no matter what age you are never too old to ask for money for your parents. That's what they exist for. So, okay. So in a fun way, the current interest rate environment, and I'll go over this briefly, has made it really easy. There's what's called a checking and a savings account. The good and the bad news is that savings accounts are paying essentially zero interest. So I would recommend to everyone on this call, don't even bother with a savings account. So for example, if a savings account is going to pay you 0.1% on, $10,000, that's $10 a year in interest. So it's really not worth having another account for $10 a year of interest. So sometimes it can be nice to have savings accounts for other reasons. And traditionally in the past, when you could make more interest from a savings account, that might be something to look at and look for a good online savings account. You might even, get this conventional wisdom from the internet or parents or other places. A lot of people on this call probably have a savings account. I actually closed mine. Again, just simpler the better. So really the type that matters is a checking account.
Andrew, we have a question.
Perfect.
Yes. So the question to savings accounts is, so the question is that the reason they have a savings account is so that they don't spend what's in their checking, because out of sight, out of mind. So yep. What would you recommend in place of a savings account so that you don't have access to the money as readily as you do in a checking account?
So that's perfect. And that's exactly why I'd recommend a savings account, right? More from what I call the psychological side of money, right? Which is more important. But yes, from the pure financial side, there's no reason to. So, and I'd recommend it at the same bank. I guess what I was trying to say is I wouldn't fret about the savings account, the interest rate, right? To have money set aside for a certain purpose, a savings account is great. I will go over a couple other recommendations, but you're not going to make money in the savings account, right? And you used to. So
yeah, you might not spend it.
Correct. Yes, but to have it set aside and to save for another purpose, I can go. That is a good reason to have it as a savings account. And most online banks will even let you label that account for a certain purpose. So actually, even though I don't use it anymore, I think I have an online savings account that still says Tesla from like 6 years ago when I wanted to save for a Tesla. I just never renamed it, and I never bought a Tesla. So, but it's what I put the money in there for. When it comes to checking accounts, again, the biggest thing is to have one that's free to open, free to use. So I find just try to avoid the small maintenance fees. I'm a fan of Capital One 360, the online one. There's plenty of others. I deposit checks. They're easy to use. They have a nice feature where if you did overdraft, there's actually really no overdraft penalty the way they work. And when it comes to checks, you can get checks, but most people don't write checks anymore. But that's still checking accounts. You still need that information, the routing number and account number. So they're called checking accounts even if you never have a checkbook. So there's certain rules that you can actually only move money from a savings account only a few times a month. Most people don't realize that until they've tried to do it.
We have another question.
Perfect.
So the question is, do you absolutely need a debit or credit card or ATM for checking account? Because their bank gave them an option and they said no due to the impulse control issues. What setup would you recommend if an individual has poor impulse control, especially when spending?
Yeah, so when it comes to that, that's really where I would have either a savings account, or I recommend an Able account, or that's where I recommend the non-tech savvy credit union. So you absolutely don't need one. If there's, a concern of if there was an emergency, being able to get one. I try to recommend that, you either have a separate account at another bank, so it takes a few days to transfer. So that way, if you did need money, that you couldn't get at it for several days. So, but you have enough money if you want to do something. So my question, and the person can ask a follow-up, would be, well, what happens if you needed $100 today and it's a Saturday and the bank was closed? What would you do? As long as that's planned for somehow. So long story short, you don't need one necessarily, but I would try to find a solution that incorporates using one healthy. And I think that's where having the two bank accounts is the solution that I recommend the most. So you keep so much in your checking account with the debit card to get through the day of the week. And when you need more, you can go online, you can transfer it over, and that takes a few days. Generally, I find that really helps with the impulse control. I haven't had a situation where that strategy has not worked. So, and don't feel free to challenge me. I hope it does work.
Yeah, I have to agree with you. That's actually what we do at CIP is we decide on a budget that's realistic, and then we do the same thing. We have a certain amount of money in that checking account. The rest goes in the savings account, and then we work within those confines just to make it easier so that there's not.
Yeah. I also find too that if you don't have a debit card and you have cash, you're probably actually spending more. Most people, including myself, when I have cash in my wallet, I tend to spend it very quickly and I don't want it. So it also is harder if you want to keep track of how much you're spending to do so, obviously, with cash. So I think there's also a way to, let's say I'm going to use Capital One 360, other banks can do it too. You can lock your debit card or your credit card, right? So that it won't work unless you unlock it. And maybe if you didn't, maybe that's a strategy as well. So I guess if it works for you, it works for you. If it's not working for you for some reason, and there's an issue we're trying to solve, then we could solve it. But at the end of the day, it's what works for you.
Yeah, agreed. And I think seeing it written down, so when you use your debit card, you can actually follow the expenses. Like you were saying with cash, there's no trail unless you keep those receipts. So it's a lot
Nobody
easier.
keeps receipts.
Yeah, exactly. It's very difficult these days. But doing online purchases or doing purchases via your debit or credit card, you have a trail, so it's much easier to hold yourself accountable.
100% agree. There's also protections that come with debit and credit cards that I'll get into in a little bit later, fraud protection, you know, and just a bunch of others. So I would encourage another strategy to be found. So again, with savings accounts, from earlier, what we mentioned, from the impulse control, which I 100% agree with. Again, having it at another bank is probably a good idea because otherwise you can transfer instantly from a savings account to a checking account. So having it at another bank where it takes a couple days to transfer is what I would recommend. However, I would not really focus on a bank that pays a higher interest, is what I was trying to say, because it's really not going to make any difference.
Someone asked about PayPal. Does PayPal count?
I would say, to me personally, and the people that I work with and I know, I treat PayPal as like cash and free money. So I'm more likely to spend money in my PayPal account because I feel like it's not a real bank account or real money. So I would not do it that way. And also, if it's free, I would just have an online account that's linked to PayPal. If PayPal works for you, then that's okay. But I'd recommend a separate savings account that's not PayPal.
Thank you.
And I guess my theme is there's no necessarily right or wrong answers. So if PayPal's working for you, right, then great, like keep doing it that way. So I guess with the questions too, if you feel like, hey, I don't know if PayPal's working for me, here's why, that might be a little more helpful just with some of the questions versus, here's what I'm doing, is that wrong? I'm probably going to tell you it's right as long as it's working for you. But if there's an issue or something that we're trying to solve to make the situation better, then there might be better options as well. Hopefully that helps. So going to talk a little bit about removing some financial stress. Everyone stresses about money. There's a reason. There's a financial therapy association. I'm a member. And, you know, it's just there's so much stress when it comes to money and finances. A lot of times we make it more complicated. Even though I'm going to try to make this presentation more simple, it's still fairly complicated. I want to reiterate, there really is no right or wrong answer to a lot of this. If, you know, you're saving a little, right? If you're not getting into debt, if you're doing just a few small things to move in the right direction, that is amazing. That is great. You're probably doing better than you think you are. So just keep that in mind. And remember that the things that I'm suggesting with the budgeting, most people don't do. I talk to so many people, you know, multiple people a day about money, their finances, and I can tell you the vast majority don't do these good habits. And that's not saying they're not good habits and that you shouldn't be doing them. What I'm saying is if you can do one or two and you can start to do it well, then you're so much ahead of, you know, the majority of the entire population. So I want to, the better you can make it, you know, set it and forget it. So there's online banks and there's software that can keep track of how much you're spending and categorize it for you automatically. As far as savings, if you get so much money every month, you can have it split into a savings account. And I'll talk about some other alternatives to savings accounts, but I'm going to use those interchangeably. And you could have that go as part of a paycheck. You could have that go every month. The more you can do that's established on autopilot, the better. So if you have a job and a 401k and you can put some of your paycheck away as a match, or if your employer offers access to, you know, an Able account or something else, then the simpler and the more automated, the better. And I find that's just the easiest way to do it, and you'll be really surprised about how quickly things build up. I also like to say that there's, short-term goals, medium-term, and long-term goals. I find for anybody who's more than 10 years away from retiring, just the thought of it is just so far out, if not impossible, right? Especially with all the short-term needs. So I also think it's really important to establish a savings for a medium-term need. Think of my Tesla fund, or, I know many people will put money in a vacation fund and use that every year, or have someone who's saving for a therapy dog, or something that's more attainable within a year or two, I think is a really good idea. It's also very tangible, right? Like, what is retirement? Maybe I'll be dead. I'm not going to live that long, right? There's so many, ways to say that and structure that. So I think it's really important to have some shorter term saving goals that you can accomplish within a year, some within a few years. You don't want to focus, all of your saving goals on just 6 months from now or all 60 years from now. It's important just to have some in the middle. So this is a rule of thumb, and again, it's a rule of thumb. I'm stressing that don't stress about it. It's just to have a good idea. It's not always attainable. This is an ideal situation, but so much of the reason that we do this is because things do change, things do happen, right? The whole idea to have, savings if something happens is because it's an unpredictable event. But there is a popular rule that says 50, 30, 20, which is fairly easy to remember. And that is 50% of the income you have every month you can live off of. So, nothing fun, not, Netflix, not, dinner, gifts, subscriptions. That's no way to live. But if you can have 50% on what you actually need to live every month, then 30% I think are wants. Now, whether something like Amazon or Prime or Netflix is a want versus a need, I mean, it's almost more a need at this point versus a want, but that would really fall in that category. I find this is the area where we tend to spend a lot of money, especially on impulse things, right? I was thinking how I need a new computer for one of my office staff, and it was, let's say, $100 or $150, and I'll spend an hour on the internet trying to save the $50. But then I wanted to order lunch that day, and it was $50, and I really didn't think twice. And again, I'm giving you these examples because this is me and this is common. So it's important to, realize that you're just, again, not going to be perfect all the time, that I'm mentioning it, and it's to do the best that you can. So, and ideally 20% of your income is for savings and debt repayment. So, but again, this is just ideal. If, don't feel bad and that you're doing something wrong if you're not able to save money right now because you have a lot of things. There's only so much, sometimes there's only so many expenses you can cut, and there's only so much income that you can make. So, and I'll go over some ways to maybe, save more, cut some more expenses in a fun way, right? Because it's also really important to, live as well.
Yes, that's a great point, Andrew. Thank you.
So this statistic really strikes me, and it's, 63% of people don't have enough to cover a $500 emergency. And so what I'm going to stress on this call is, if you could be better than the 63% of people, then that will help you so much. Because what happens is, when, a car fix, or again, appliance, or, when something comes up, if you can even just have a couple $1,000s saved, if something comes up, that is so helpful and good to have. And that money is there to be used. Don't feel that you can't use it. Sometimes, it's not good to call it an emergency fund. I realize I am calling it an emergency fund, but, like rainy day fund might be a little bit better. But getting to that goal of having that $500 is really important. And when it comes to the out of sight, out of mind example, I know there were lots of individuals who got enhanced unemployment or a check because of the COVID stimulus release, and the majority of them just spent it very quickly and then it was gone. What I recommended is, okay, take a third of it, take what you can, and put that away, put it where you won't see it, put it where you won't know it exists. When I played Monopoly as a kid, I put a $500 bill under the board, so I forgot it exists, right? Very similar to the person who asked the question about the savings account, right? Same idea, and that's why, the savings are good. Because if we see it, a lot of times we want to spend it. And if you can have the money for when these emergencies come up, it really saves you even more money in the long run, because otherwise you might need to rely on, credit cards, or, simply not pay or go without, and it causes so much stress. So if we think that 63% of the population couldn't cover $500, I think it's a good goal for everyone on this call. Within a year, if you could have, $500 covered, which if you think about, that's a lot. I don't know if that's attainable. That's $10 a week over the course of a year. So I think putting away $10 a week for really almost anyone, right? Again, done consistently, done small, done right, is really attainable. And this is basically what I just spoke about. And this was just, again, the small money adds up really quickly. You can transfer just a small amount every time you get paid or at the end of the month. Tax refund, COVID refund, if you get a payment from something. And it's also really important that if you build up a savings account, it's also okay to use it. You're not going back. That's what it's there for. You're not taking a step back in a direction. So I have individuals, and they, built up the savings, and he's finishing his bachelor's degree and had to buy a new car. And then his savings is lower than it was. Well, that's what they're there for, right? You can't take the money with you. It's important to be there for those things that we're going to need, right? So I do want to just really, really stress that. I can't stress that enough. So when it comes to cutting spending, I really like to take a realistic approach. So meaning, you have to live, you have to do things. It's important to do things that you want to do, but there's definitely ways that you can make things better without affecting, quality of life, especially just in a negative way. So, for example, especially if you have online and subscriptions, check it every couple months. What subscriptions aren't you using? I think of like a Spotify or an Audible subscription. Audible is very annoying to cancel. They'll ask you like 4 times, are you sure, if anyone's ever signed up for that? And a few others. So if you're not using it, or sometimes there's a new service, right, that might be, better. So, if you have 4 different TV services, Hulu, Amazon, Netflix, do you need all of them? A big one I find is negotiating. If you want to call Comcast and yell at them and ask them to lower your bill and say you're leaving otherwise, they will almost always certainly lower your bill and give you more. So it's one of those things where to ask and to negotiate. So of course, you can cut cable and you can cut things you don't need, for example, but it may be just as good to go back to the provider you already have. Go to your cable company, right, your internet company, and many times, and this applies to insurance as well, they're unable to lower your rate unless you ask, unless you say you're going to leave. It's part of their policy. So really, it's best just to ask, what promotions do you have going on now? So if you can have the exact same thing you had before and save less money, then that's a great thing. So for example, there is, if you are getting EBT, SNAP, Medicaid, SSI, Amazon Prime is less expensive. There's tons of, other ways to just cut expenses. Similarly to the coffee and the lunch every day, I myself am guilty of this one, right? And you don't want to deprive yourself, right? But if you're spending $30 on lunch 5 days a week, right? That's $600 a month. That's not insignificant, right? So with that, if you could even buy lunch and eat out twice a week, right? And you could save a few hundred a month, that's really significant. I would say, if you like the coffee once a week or a couple times a week and, you get a lot of enjoyment about that, don't deprive yourself, right? Don't live and save every penny, right? So some of this seems really simple, but I'm going to give a couple of examples. I really like coupons, and part of it's because I'm Jewish, but also because it's just an easy way. And I'm allowed to make that joke, I think, because I am Jewish. But so there's, the coupons to store at the restaurant, they're not as common anymore. Now it's a lot of, let's say, online coupons. There's what's called deal sites, where sites list deals of places having certain sales. So one I like to use is just called dealnews.com. If I'm looking for something, like I needed a new webcam for an employee's computer, and I found a webcam that was on sale with a coupon code, and I like to start there. Just be careful, it can be dangerous. I think my mother-in-law checks it every day now and ends up probably buying more than she saves. But if you're looking for something in particular, coupons don't mean those physical coupons with the grocery store, right? It can mean, an online coupon for signing up or a discount, right? One of my favorite things is cashback services. I don't know if anyone in here is used of what's called like Ebates, which is really cool. It's when you buy something online, you get cash back into your PayPal account for what you were already buying anyway. So and they do this because when they get paid for you going to their website. So for example, Deal News makes money if they link to Kohl's, kind of like a commission. Sharon, have you heard of any of these? Feel free to jump in.
Yes, there's Rakuten and Ebates. There's a bunch of different cashback type options that you can do. So I have heard of them, yes. I don't do it myself, but I have heard of them.
And it's free money, right? So if you're buying something online and it's $100 and they're going to give you $4 back. And then what I really recommend is use that money in, like, let's say they pay it to PayPal, then use it for fun things, right? And it kind of builds up in a fun way. One of the other really nice ones is the price matching. All the major stores will almost certainly always match Amazon and some others. So if you need something sooner rather than later, check online. There's apps where you can scan it. And all you have to do is, if you look it up on Amazon and it's cheaper than at Best Buy will just match the price of Amazon. So I find that's a really easy, overlooked way to simply, save some money for something that you're buying anyway. And again, it's a lot more the things that you can buy, online, maybe some of the bigger purchases. So, but especially if you need something a little bit, sooner, really don't underestimate the price matching that comes along.
Yeah, I have another tip also is that if you know you're buying something from a particular website, sometimes just subscribing to their email list will get you 15% off or 20% off or 10% off. And then you can unsubscribe afterwards if you don't want to get inundated with their email.
100%. I do it all the time. I agree. And that's where a site like dealnews.com, which is not on here, is really helpful. Like they'll say, subscribe and save with Amazon, and then you unsubscribe right after, right? Or something along those lines. So absolutely agree.
Yeah, and somebody recommended also Amex Blue has also some incentives like 6%.
Who is that person? I want to give them a high five. That's my favorite credit card.
Yeah, their name's Colette.
So
also they give 3% on gas and they give 1% on everything else. So they cut their expenses through it and then they get quite a bit back afterwards. So things are going to spend anyways, right?
Yeah, that's actually my favorite credit card. It's actually one of my favorite credit cards. It's the one I use for just about everything. And you can, 100%. That's a great one. And they have other deals. So if you spend so much at a certain store, my favorite is where you buy a gift card at the grocery store to get the 6% back, and then buy something elsewhere. So
smart.
Yeah, lots of good credit cards out there. I try to recommend the ones that just give you money back versus all those points. They're really convoluted. I've never seen them work out well. Kind of like a timeshare. I've never seen one of those work out well either. I apologize if anyone here is stuck with one.
I'm sure somebody, but yeah. Unless you use it all the time, then maybe. But yes.
Yeah, but even so.
Yes.
So this is one of my favorite ones, and I won't pick on anyone on the call. But avoiding scams, one thing that I hear quite a bit is that, oh, well, if I don't have anything online, then I can't be hacked. I actually really disagree, because then it's really easy for somebody to make an online account for you and you won't notice, right? You won't get alerts if something happens.
That's a great point.
So, and there's lots of credit, there's Credit Karma, credit card companies. Something I really recommend is to freeze your credit. So you can have it so nobody can check your credit unless you unlock it. There's also, I think I'll talk about credit later. If not, I'll come back to it. Sorry, I can't remember. I thought maybe I got to it sooner. But so one of the things is, it'll alert you. You'll get fraud alerts. You can see your credit score. With scams, we get them all the time. It's really common. I know it sounds silly, but one of my favorite ones is use a password manager that saves your passwords. And that's important because, so I have this argument with my wife every time because we have a very complicated Netflix password. So we're trying to set it up on the Roku and it takes like 5 minutes to enter the password. And it's only every like few months, but she brings it up every time. And it's, well, it's just Netflix. Who cares if someone hacks our Netflix? Well, but if someone hacks your Netflix and use that password for other things, then they can get in other things. So it's not about the password for the site that you're using. It's more about just having different passwords across websites. So something like LastPass, or there's other examples as well, that can remember all of your passwords and fill things in, is really much more secure than using a lot of the same password or small variations thereof. Because if somebody gets access to, one of it, right, then they can have access to all of your passwords. So try not to reuse them. This goes without saying. If somebody calls you and says they're tech support, they're not, right? Microsoft, Social Security, they will never call you. I don't answer any calls on my cell phone that I don't have in my phone. Probably a little, too much, but so I think there's that. And periodically look through your accounts. Talking about American Express, they'll give me an alert if a purchase was made and I wasn't there. So that's as simple as, me calling it in and me giving the credit card over the phone, right? But that alert can be helpful because that means the card wasn't used at a store.
Yeah, and also some phone companies have a potential spam alert so that you could, they'll filter the call for you. So it'll say potential spam. And if it isn't, they'll leave a message and you can listen to your messages, but at least you don't have to answer them.
Yeah, I find just don't answer any phone calls. I don't even like listening to voicemails. So I usually, I should probably just make my voicemail full so people can't leave them, but that's a completely separate issue than finances.
And then we have to make sure to clear the voicemail because we don't want a full mailbox, right?
Well, no, I do.
Okay.
Then nobody can leave from my cell phone. My office is different.
Oh, okay. So they have to pursue you. Yeah.
Yeah, I know some people who never clear their voicemail, so they never have to check them. So I'm almost at that point, but I'm not quite there yet. So, and be very careful what you give out. So my fun example, and Sharon doesn't know why I asked this question beforehand, but where she was born, and that's because. So, for example, for most individuals, the first 3 digits of your social security number are where you got your social. So, for example, I'm going to pick on Connecticut, and that's 04. So, if you are from Connecticut or you got your social in Connecticut, your social security number is going to begin with 04. The middle 2 are roughly when you were born / when you got your social. So for example, if you were born in 85, your middle numbers are probably 88, right? Or 83 or within a range there. And the last 4 are random. The government actually did recently change this. So if somebody knows where you live and or where you were born and your birthday and the last 4 of your social, they can almost certainly guess your entire social. So if I'm from Connecticut, it's 04 something. If I'm 31, then it's 89, within a few of there for the middle. And if you know my last 4, then you know my entire social security number. So be very careful about that as well. And if it sounds a little scary, it kind of is. But that's also another reason to freeze your credit with the credit bureaus. So I couldn't play the game where I guess Sharona's social security number on this call because she's, moved around and from Canada. I'm not quite sure how that works. So, but
advantage, yes.
Yes, but it is a little fun. So it's too surprisingly easy to figure out someone's social.
That is interesting to know.
This is part of the presentation. I want to come back to it. It's more, again, programs and services that may help when you have like public benefits.
We did have a question about Able accounts, so maybe you can.
That's actually what a lot of the rest of this is, but I do want to talk about something else that I'm kind of surprised I didn't see on the slide, and then the rest, Able accounts and other questions. One of my biggest recommendations, and it's my fault it wasn't on the slide, is if you don't have a credit card, get a credit card. It is one of the most important things you can do. And if you're curious, why is a financial planner saying to do that? Your credit score matters for so much. It matters for insurance rates. It matters for getting an apartment. It matters for getting a job. It matters for getting loans if you ever need one. So what I really recommend to people is if you don't have a credit card, get the simplest credit card. Just pay one bill like Netflix every month, $15 a month, and have the balance just automatically paid in full every month. the biggest thing when it comes to a credit score is the length of time you've had credit. So the longer you've had credit, the better your credit score will be, and it impacts everything. So I recommend to people, get a card set to automatically pay off every month, set it for one bill, and you can cut up the card. It doesn't matter. So, but what does really help there is just the length of credit, the one bill. You know, a store card could work, an Amazon card could work, but I recommend, you know, get that one card, that $5, $10 a month expense, and have it just paid off automatically every month. So able accounts are one of my favorite topics. That was going to be the rest of the conversation, but I'm happy to open it up to questions as well.
How many lines of credit is a good amount?
Lines,
I guess how many sources, I would imagine. So lines of credit in that sense, like having department store, personal credit card, you know, those types of things, I would imagine.
From a credit card perspective, having more is usually better. It's not going to make a big difference in your credit. Also keep in mind that if you're not using some of those store cards, they will close them. And unless they're paid off automatically every month, I just feel it's a big hassle, right? So I personally, and professionally, like to say, try not to have too many. Or Target had a debit card option instead of a credit card option for the discount, right? Or try not to have too many store cards. So a good amount, just, I don't know, probably a couple just for the ones you use that are really worth it, that really offer a lot of benefits. As long as there's a good reason for opening one beyond just like an initial sale. So a lot of stores will be like, sign up for a credit card today and get so much off your purchase. And after that, there really isn't that much benefit. That one I really wouldn't do and I'd stay away from. But if it was, Target or Amazon, that's 5% off everything you buy, and you go to Target and Amazon a lot, that I find is worth it.
Right. There's no other questions at this point.
Okay.
There is one related to able accounts, but I want you to first, I guess.
Yeah, I mean, able accounts are great. I have a few other slides on able accounts in general, but and happy to answer any questions. I'm actually an able ambassador for 2020. Connecticut just opened theirs. I was at the Treasurer's press conference on it last week. I didn't get to do anything really. An able account is a great savings account. It allows money to grow tax-free, and it doesn't affect any government benefits. It's also has, to some of the earlier points, if you don't have a debit card with an able account, right, then it takes a couple days to transfer the money out of the able account. So that's a great savings account alternative. As I mentioned, that I'd mentioned some other things for savings accounts. The really nice thing about an able account is, so it has to be used for what's called qualified disability expenses. But what almost nobody tells you is that that's only the money that it makes. So if you put in $10,000, you can take out $10,000 for whatever you want. If it made $100 of interest, only that $100 of interest would have to be used for a disability-related expense. And I've never seen anyone audited for a disability-related expense. I've helped hundreds, if not thousands, of people open able accounts, presentations around the country on able accounts, and I encourage you to be a little bit more liberal with them. They are great tools. I find if your state offers one, that's great. If your state but generally I find the one I like the most is Ohio's. That's stableaccount.com. They were the first able account in the country. They are so easy to use. It's really easy to keep track of your expenses, like we spoke about, to see how you're spending the money in the categories. They also have options for if there's any providers on like CIP, for example, could manage 100 ABLE accounts from one login. They're really, really good. And so I like Ohio for that reason. There's a few other states, and if your state has their own, that's okay too. I have mine with Massachusetts and Fidelity. It's one of the only ones that has 0 maintenance fees and 0 minimum balances and no debit card, but they're a little more cumbersome to use. I also already had some accounts with Fidelity and Fidelity's credit card. But so, when it comes to an ABLE account, I think there are absolutely fantastic ways to save. I strongly recommend, without knowing more, Ohio's probably my favorite one for ABLE accounts. Are there any questions on ABLE accounts? I could talk about those for 2 hours.
Yes. So someone asked, can you transfer money then from the Social Security payments into your ABLE account? In order to keep receiving benefits, you're not really allowed to have more than a certain amount of money in the bank. So how does that work?
That's essentially why they exist. So with an ABLE account, you can absolutely 100% do that. You can only do up to $15,000 a year, a little bit more if you're working. I have some other slides I can go through. And some of these, let's see. So the example is makes it invisible, right? So it's not counted towards that $2,000 in most states. Some states it's $1,600. So an ABLE account is, again, the absolute perfect reason for that. Some employers can set up direct deposit. I work with lots of employers to help them design their benefits packages for individuals who are on benefits. So, for example, setting up direct deposit to an ABLE account, things of that nature. ABLE accounts that's 100% exactly how they were designed. And if there is more than 100,000 in there, you could start to lose benefits. If there's more than 100,000 in there, I think there's some things that we could, spend it on too. So that's a good problem to have.
So that includes 401k as well. Then it doesn't affect benefits either if you have money in a 401k.
401k, again, benefits with Medicaid are very state specific. A lot of what we do is helping people with what benefits they may be eligible for, what they might be entitled to. Long story short is a 401k is generally counted. Many states do have exceptions if you're working with a disability and you want to save into a 401k. If anybody wants to, email me or ask me questions after, but that's a too individualized question for me to answer on the call.
Okay. And in terms of being qualified for an ABLE account, do you have to be receiving disability SSI?
That is an awesome question. Seriously, it is. And the answer is no. So you need to meet the Social Security definition of disability, which means that you have a disability and it occurred prior to 26. If you are on SSI or SSDI, you are automatically eligible. And by the way, that plug on the screen of a financial planner who's knowledgeable about ABLE, there really aren't many. I'm one of them. But in all seriousness, for example, I have a template letter for my ABLE account. It was signed by my doctor saying, autism disability, and I have an ABLE account. So you don't need to be on SSI or SSDI, which is a common misconception. You just need a doctor to sign the letter saying you had a disability, and that's all you need. Because many times people will put money in an ABLE account before applying for SSI if they have too much money. So now, if the disability occurred after 26, you're not eligible. But something that's really important is it's when the onset of the disability was. So for example, I was diagnosed with autism after age 26. I'm still eligible for an ABLE account because the autism was there prior to age 26. I actually had SSI previously for other things, but the point of the matter is it's not when you were diagnosed. It's when the disability occurred, not even necessarily when you knew about it. So if anybody with ASD, you should be able to qualify with a letter from your doctor. I have a template letter. I've used the one that I used with my doctor, and I can send that to Sharona, or if anyone wants to email it to me, I'm happy to send that along to anyone in order to open an Enable account. I would encourage people not to overthink it, which I know is tough. I've never seen it questioned, if that makes sense.
Mm-hmm. And you'll have your contact information at the end so people can email you. But it is Andrew at planningacrossthespectrum.com.
Yep. And that phone number is actually, I need to update it. It should be 855 autism too, not 866. But my email is the best way to reach me, or my website. So I'll leave this up here for a few minutes. So did anyone not chuckle at least once during this presentation? If they could leave a comment.
I was chuckling personally.
Good.
All right. So, so somebody has a technical question. Is it
Sure.
an MD or can it be a PhD or PsyD who signs that letter?
What was the first one?
An MD, a doctor.
Oh yeah, sorry, MD. I've never seen it questioned. I've submitted. Mine was a PsyD, if that's helpful for the person on the call. But MD, PhD, I think it's just a physician. So I think an LPC would work too. Really, anyone who's qualified. Again, it's not the test like Social Security, right? You're talking, to be very blunt, Fidelity doesn't care, right? You're submitting it to like them or Ohio or Enable account. Anyone who could diagnose you, I think is perfectly fine. I've never run into an issue in all my years in talking about these. So
that's great. One of the questions that came up is, do you serve all states?
Yes, all 50 states. I even have a client, audited internationally in Switzerland I'm working with right now.
Okay, wonderful. Great. And definitely, people should contact you directly. If there's any other questions, you can definitely contact, us at CIP as well. My email is ssommer@cipworldwide.org. And I didn't know if there were any last minute questions or any comments that you wanted to give Andrew, last parting words before we close today.
Yeah, this will be on YouTube, right? Or recorded and uploaded?
So this webinar is recorded and it will be on the CIP website, which will be cipworldwide.org/events. And people will be able to view this. And anyone on the call right now will be receiving the recording in a follow-up email.
Awesome. I guess the only other thing I want to add is if you're unsure whether you should open an Enable account or something, just do it. It's not a bad idea. It's never a bad idea to start saving some money. And again, if you have some questions and you want to confirm, feel free to email me. I'm happy to help, anyone open an Enable account or save money. But if you're unsure, just do it.
Great. Thank you. And that's great parting words. I appreciate that. Thank you so much, Andrew, for presenting this today. There was lots of great information, lots of great tidbits and pointers. So definitely appreciate that. I thank everyone for joining us on the call, and we look forward to seeing you next time. For future events, you could go to cipworldwide.org/events. And Andrew also has a monthly webinar series coming up on money matters with Becca Hector-Laurie, and you could email Andrew for more information on that.
The next one is tomorrow at 4 o'clock. It's called Two Autistics Talk Money, and that's about all I know about what we're going to talk about so far. So
we're exciting.
Thank you.
Thank you all today. Thank you and have a great day.
Thank you.